we talked about this in January, that the 4-year cycle was likely to repeat. Humans were going to human.
Yeah.
We would move above fair value. And I actually, look, I thought it would go further above. I thought we'd hit 150 or 170. I think, companies like that literally will go to zero. And that type of environment isn't good for Bitcoin short term, because Bitcoin is a savings tool, right? Most people view it as kind of like gold or cash, or it's this thing over here that you don't want to touch.
As Bitcoin weathers another cycle of consolidation, Mark Yusko's latest insights cut through the market noise, offering a clear-eyed view of where true value lies in the world's leading digital asset. Mark Yusko, founder and CEO of Morgan Creek Capital Management, offered a sobering yet insightful perspective on Bitcoin's current market dynamics, emphasizing that the community's focus should shift from short-term volatility to long-term adoption. He noted that it now requires substantially more fiat to acquire Bitcoin than in its early days, making new whale accumulation far more capital-intensive. According to Yusko, Bitcoin's fair value, supported by Tim Peterson's models, suggests the asset is slightly above equilibrium, consistent with a distribution phase where newer holders are selling while long-term believers remain patient. His declaration that we may have entered a crypto winter aligns with Bitcoin's historical 4-year cycle, reflecting natural consolidation after speculative peaks. Interestingly, on-chain data reinforces this thesis. October saw mega whales accumulate roughly 52,500 Bitcoin, equivalent to $5.7 billion at an average price of $108,600. This quiet accumulation signals deep conviction from institutional and high-net-worth investors even amid stagnant retail participation. Yusko's analysis ultimately underscores that Bitcoin's next leg higher will depend not on hope or speculation, but on steady adoption, capital inflows, and expanding real-world utility, marking a crucial maturation phase in its long-term monetary evolution. As Bitcoin's journey through this crypto winter unfolds, Yusko's insights remind investors that conviction and adoption, not hype, will define the next chapter. What are your thoughts on his outlook? Share your views in the comments below, and don't forget to like, share, and subscribe for more in-depth crypto analysis.
We need to be focused on, in my view, is it takes a lot more fiat to buy a Bitcoin today than it used to.
Here.
So most of these whales that people talk about, they bought their Bitcoins when they were fractions of a penny, single pennies, single dollars, sub $100. And it didn't take very much fiat to become a whale. If they want to sell some because they want some running money, or they want to buy a house, or whatever, someone could buy islands, that's their business. And we need to be working collectively as a community, getting people to adopt Bitcoin as a store of value and ultimately as a means of payment. And so, but it takes more capital. And, at the end of the day, fair value is kind of where we are. We're actually still a little above fair value based on, Tim Peterson's work. We should have Tim on. Tim would be a fun guest to have on. He would do it for sure. I spent a lot of time with him last Friday after you and I recorded. Mm-hmm. And, his point was, look, we're in a distributive pattern.
Yeah.
And what that means is there, more sellers that are for the first time selling. Now, it's not as bad. And I didn't bring the chart, what could have been the chart of the week. Yeah. But there was a great chart that someone did that said, really the vast majority, like 70% of the sales in the last month, since the peak on October 6th, have been coins owned less than 2 years. So it's not really, but the thing is, those are reacting to the other 30%, that are moving for the first time, and people are freaking out and panicking. And I get it, but if the only net new participants in our market are arbitrageurs like Millennium, right, that buys IBIT and then shorts BTC against it for a market neutral trade and make the roll down yield, that's not gonna push prices up unless we get more people to buy. So anyway, I don't want to. Actually, I'm going to go on record. Breaking news, so to speak. I do unfortunately think we're in crypto winter.
That's why we got our sweaters out for those that are on audio only.
Yeah, I mean, look, I know no one's going to like this, and I'm going to get lots of crap on Twitter about it, but we talked about this in January that the 4-year cycle was likely to repeat. Humans were going to human.
Yeah.
We would move above fair value. And I actually, look, I thought it would go further above. I thought we'd hit 150 or 170, the S curve. Look, we're in the adoption phase of the S curve, but that's the point. We need more adopters, right? We need more people to take some of their fiat, convert it into Bitcoins, use it as a savings tool, use it as a, payments mechanism, use a Strike app or something. But that has slowed. That's why the rate of growth of the fair value has actually slowed down. The number of transactions is off a little bit, the size of the transactions. So the fundamentals, they're not bad. They're not like crashing, but they're not in bull market zone, which means number go up, hopium, which is what is all over crypto Twitter. It just isn't going to work. And look, I hope, so there it is, the word. And by the way, hope is a 4-letter word in the investment business. It is not an investment strategy. But I do hope that I'm wrong-ish and that, everybody goes away in a couple weeks for Thanksgiving.
As speculative markets lose steam and investors reassess risk, Mark Yusko's sharp take on Bitcoin cuts through the noise, revealing how the world's leading digital asset is quietly evolving amid a critical phase of redistribution and maturity. Mark Yusko provides a sharp analysis of Bitcoin's current market cycle, identifying it as a distribution phase where seasoned holders are offloading gains to newer participants, a pattern typical of maturing asset classes. Drawing parallels to speculative sectors like AI and quantum computing stocks, Yusko highlights how excessive hype often precedes correction, warning that many of these overvalued companies could ultimately go to zero. He explains that such speculative unwinding exerts indirect pressure on Bitcoin as investors liquidate stable assets like gold or Bitcoin to cover margin calls during downturns. Despite short-term volatility, Yusko interprets this phase as healthy and necessary for long-term growth, enabling broader redistribution of coins and encouraging new market participants. He stresses that Bitcoin's evolution depends on expanding accessibility, particularly through smaller units like Satoshis, to drive mass adoption. In his broader view, the real obstacle isn't price fluctuation but the limited entry of new users into what remains a relatively closed ecosystem. Fundamentally, Yusko's insights reaffirm Bitcoin's revolutionary design, a decentralized system solving the historic double-spending problem, establishing digital scarcity and trust without centralized oversight. Let's get back to the interview.
We're in unfortunately a distributive pattern. And that means that people who have gains are selling to noobs. And that's just the way every asset goes. We're actually going to see it in AI stocks. There's going to be massive distribution and they've rolled over hard. Oh my gosh, we've seen it in the, I can't even call them new meme stocks because they pretend that there's actually a business like, the nuclear stocks and the quantum computing stocks.
Quantum. Mm-hmm.
I mean, Rigetti just failed DARPA level B. So there's like DARPA 1 where you can get a grant from the government and people call that revenue. Like it's an educational grant, research grant. And we like it. I mean, we have an investment where DARPA has given them, a lot of
Right.
money, and we count it as revenue, but we don't expect a multiple on that because it's not guaranteed and it's not repeatable. But anyway, they applied for a new grant and they got rejected. So now
major insult.
the stock has rolled over hard, and the true believers, and this is the thing, what do they believe in? Right? They believe in hype, like the Willow story. Like Google releases this Willow story. Every time Google stock goes down now in the last 6 months, they just release this Willow story again.
Exactly.
It beats some benchmark. I'm like, well, but what are the benchmarks? I mean, the benchmarks are factor this number. Like, okay, factoring a prime number. Yeah, you can do that faster than a CPU. Okay, great. But how am I going to use a prime factoring computer? It's not going to help me if it can't get math right. Right? If it can't do 2 + 2 = 4 100% of the time, not 99% of the time or 98% of the time. Long story. I think, companies like that literally will go to zero, and that type of environment isn't good for Bitcoin short term, because Bitcoin is a savings tool, right? Most people view it as kind of like gold or cash, or it's this thing over here that you don't want to touch. So you got this other stuff, the speculative stuff. Oh, I'm gonna go levered long, Oklo stock, this modular nuclear thing that will never happen. But you lever up on that and you get a margin call. Well, the stock's down 30%. You can't sell that to make the margin call because you have hopium that it's going to go back. So what do? You sell your gold, you sell your bonds, you sell your Bitcoin. And so that in these liquidations, NVIDIA rolled over. Now, look, I've been wrong about NVIDIA for a very long time. Take full responsibility for just not seeing the logic that a company could go to 30 times revenue. I didn't see it. But in the last few days, it's rolled over hard. And there were people that bought these 5 times levered, ETFs. Those things unwind super fast when it happens. So I am a little nervous. The distribution must happen. And if I'm selling an asset that cost me $1 for $100,000, okay, the person who's buying it has to come up with $100,000, like real fiat dollars, which means there are a lot of people that have $1. Lots and lots. There are very much fewer people that have $100,000.
Yeah.
Okay. That's just math. And so that distribution is real. And ultimately, this is the crazy part, ultimately, the bulk of those old coins have to get sold. So the Greta response, how dare you, right, can't be. We need all those coins to transfer to the masses, and not whole coins, but fractions of coins. Like I still think we should go to Satoshis, right? Because there's plenty of Satoshis for everybody. There's not enough Bitcoin for everybody. And, anyway, but that's where we are. And it is so inevitable and so positive if more people come into the community. Right now, we're a very closed community trading coins between ourselves and a few hedge funds. And we're shocked, I tell you, that the price won't just go up.
Bitcoin's ongoing distribution phase reflects a natural maturation process where long-term holders gradually transfer coins to newer participants, creating both short-term volatility and opportunities for market stabilization. As liquidity shifts, smaller units like Satoshis become crucial for enabling broader adoption, allowing more participants to enter the market without requiring full coins. This structural evolution highlights that price swings are less indicative of long-term value than the gradual expansion of the user base and real-world utility. Investors must also account for the mechanics of leveraged positions, where margin calls and forced liquidations can temporarily pressure the market, prompting sales of Bitcoin alongside other stable assets. By focusing on adoption, accessibility, and sustainable participation rather than short-term speculation, the network steadily reinforces its role as a scarce, secure, and decentralized financial asset capable of serving as both a store of value and a transactional medium. Bitcoin's redistribution and maturation phase signals a pivotal moment for long-term adoption and value. Share your thoughts in the comments below, and don't forget to like, share, and subscribe for more in-depth crypto market analysis.